Defensive is sort of the way we're positioning at the back end of April. It's a seasonally, a very strong period in markets. We've been through, obviously, with markets, as you made mention of, trading at record highs. So we're entering a more seasonally weak May and June period. We've had, a confluence of factors that have supported equities, but I think the headwinds are now starting to build. I'm not turning completely defensive. We're simply increasing cash in the portfolios and taking a more defensive positioning in the equities that we hold.
Are you trimming your equity positions, and if so, what specifically?
Yeah, we trim depending on what portfolios we're discussing, but cash has now been risen to somewhere between 16% at the lower end and around 25% at the high end. So we're taking some of the profits out of the banking space has run really hard in recent times. So we just saw HSBC report some really solid numbers today, but that's an area that has really benefited from that uptick in interest rates. We've now seen US 10-year bond yields tick lower, so down from about 174 down to the mid 150s. So to me, that presents a short-term headwind for the financial space. So we've trimmed financials and we've trimmed some of these technology companies that have run really hard at the start of the year.
James, speaking of those kinds of headwinds, the volatility in Bitcoin, I like to call Bitcoin my bad boyfriend. It just fills me with anxiety. What's your outlook for the cryptos?
You like a wild ride there, Hadley, obviously. So, Bitcoin's obviously, it peaked out around 64,000 US dollars. And it's had a pretty sharp correction in time. So I don't trade Bitcoin, but I use it as a proxy for risk and a proxy for sort of the the free money in the system. So if we think this rally is built on excess capital, a huge amount of liquidity going in there, then obviously Bitcoin has attracted some of that. The momentum on the upside of Bitcoin was starting to falter. So I think that feeds into some of our thinking around equities. So you've got complacency really high, so the volatility index is at record lows, Bitcoin at record highs, so that sort of speaks to risk appetite. We're going into a seasonally weak period, so all of these things, managing money is all around putting the pieces together and playing the probability. In my mind, the probability suggests we should, the risk reward doesn't stack up here. We should put a little bit of cash back in portfolios and be ready to go if the market does correct into a seasonally weak period. So that's how I sort of utilise Bitcoin, Hadley.